Hey traders, it's John Fortune here for this week's Weekly Forex Forecast for the 20th of July to the 24th of July 2020. As always, we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. And we're also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So I hope you're having a nice weekend. Let's jump over to the charts and see where the money is this week. So as always, we're going to start off by looking at the US dollar index. Now last week we highlighted the 9660 as a key area of support, which the dollar index had held a number of times in the past, and we finally broke down below this and we closed the week down in this area. As a result, the downtrend in the US dollar index has resumed to the downside, and we therefore go into this week with a bearish bias on the dollar index. What we would like to see in this market is any pullback in this area is going to be viewed next week as an opportunity to look for short setups in the dollar pairs, so dollar short positions. So in euro dollar, for example, that would be long positions, but short dollar positions. And if we can get a pullback towards 9682, this is going to set us up potentially for a run down towards the next key area of support to the downside and the target set at the 95.16. So we won't actually be looking at shorting the dollar index itself, but with this move in mind, we will be favoring dollar short positions next week in the dollar pairs. So the next market we're going to look at is crude oil. Now last week we started the week in this area and we highlighted the fact we were looking for a pullback down towards the 38.03, which we did get a nice pullback in crude oil. And we were looking for a rally into the 40.93, which was right here. And you can see we actually took out the target. The high here was 40.934, so we took out the target by about 0.4 of a pip before selling off, and that finished the week in crude oil. So very simply put, the uptrend in crude oil is still intact. Any pullback once again down towards the 38.03 is going to be viewed next week as another opportunity to look for bullish setups. And we're going to be looking at initiating longs up towards the next key area of resistance, the upside and the target set at the 41.52. So the next market we're going to look at is euro dollar. Now last week we started the week in this area and we highlighted the fact that we were looking for a rally. Now we had pulled back to the 1.2460. We were looking for a rally into the key area of resistance of 1.1411, which was right here. So we did have a really nice rally into that key area of resistance, and you can see finishing the week we really just pulled back as some profit taking came in and we ended the week in this area. So we had a good move in euro dollar last week. What we would like to see, as euro dollar is still trending to the upside, any pullback in this area, and we will need a pullback because we are coming quite close to the next target. So any pullback in this area is going to give us those better risk to reward setups than if we were just to take it here. Any pullback in this area next week in this market is going to be viewed as an opportunity to look for long positions. And we're going to be looking at initiating longs up towards the next key area of resistance, the upside and the target set with the 1.1495. So the next market we're going to look at is pound dollar. Now last week we started the week in this area and we highlighted the fact we were looking for a pullback towards the 1.23880, so we could get some nice risk to reward setups to the upside. We have started to pull back, so this correction now is simply being viewed as an opportunity to start to look for bullish setups, so bullish breakouts. And if we get these kind of bullish breakouts next week, this is the opportunity we will start to look for long positions in this market. And we're going to be looking at initiating longs up towards the next key area of resistance to the upside in the target set at the 1.2799. So the next market we're going to look at is US dollar yen. Now last week we highlighted the 106.72 as an area to look for a bounce to the upside, and the dollar index was still in that range last week. So we were looking to play the markets both ways. This week we do have a bearish bias on the dollar index, so any rally to the upside in the US dollar Japanese yen would be indicative of dollar strength, which is not what the dollar index is currently showing us. So as a result, this wouldn't be high on my list going into next week in terms of looking for an opportunity. The way I would like to use US dollar Japanese yen next week would be the following: either just as a plan B currency, so if the dollar short positions that we look at next week are not going to work out and we start to see the US dollar yen reversing to the upside like this, and at the same time the dollar index has reversed and broken to the upside, then we would look at this as a plan B currency. So if the initial plan A of shorting the dollar doesn't work, we will come and see, and there's not always an opportunity to trade the plan B currencies, but many times you will get an opportunity to trade these in the other way. So we would still only favor long positions in this market, but we would have to see a reversal in the dollar index before we look to trade it. Otherwise, we would just filter it. So if the dollar index does reverse next week and it starts to break to the upside, we'll be looking at the US dollar Japanese yen. And once again, we will be looking for just a breakout to the upside. And any pullback in this area will be viewed as an opportunity to look for long positions. And we're going to be looking up towards the next key area of resistance, the upside and the target set, at the 108.08. So if the dollar index, just to clarify, if the dollar index is still declining to the downside, which is our preference going into next week to look for dollar short positions, we will just filter this out, and there is a much greater chance of the 106.72 breaking and the dollar yen actually reversing to the downside next week. So we will only look for this long position if the initial plan of dollar short positions do not work out. The other takeaway from this is that the dollar and the yen are fairly evenly priced. So if we have a weak dollar, you can also consider the yen to be fairly weak here. And that is something you can consider when you venture into other pairs next week. Yen short positions would certainly be something that you could look at. So the next market we're going to look at is Aussie dollar. Now last week we were looking for moves to the upside in this market, and we had a target set from last week at the 0.7062. We did have a nice move up, but we haven't taken out the target just yet. So very simply put, for anybody not involved in Aussie dollar from last week, any pullback in this area is going to be viewed this week once again as an opportunity to start to look for bullish setups. And we're going to be looking at initiating longs up towards the next key area of resistance, the upside and the target set from last week at 0.7062. So the next market we're going to look at is New Zealand dollar. Now we started last week up in this area and we were coming quite close to the next key area of resistance highlighted last week at 0.6643. So we want to see a pullback, and we have started to pull back in this area down towards the 0.64410. We may not come all the way back and retest broken resistance from the past, turning supports here. However, any pullback in this area this week is going to be viewed once again as an opportunity to start to look for bullish setups. And we're going to be looking at initiating longs up towards the next key of resistance to the upside and the target set, the 0.6643. So the next market we're going to be looking at is US dollar Swiss franc. Now last week we highlighted the fact that we were looking to the downside in this market, and any pullback in this area we were looking as an opportunity to go short. We did kind of rally up and then we sold off very, very hard, and this sell-off here is an indication to us going into next week that we should be looking for further declines to the downside. Any pullback in this market, and again we may not come all the way back to broken support turning resistance in this case, so any pullback in this market next week is going to be once again viewed as an opportunity to look for short positions. And we're going to be looking at initiating shorts down towards the next key of supports to the downside and the target set, the 0.9319. So the next market we're going to look at is US dollar CAD. Now last week we highlighted the 1.35430, and this is a key area of support, has been tested a couple of times, but you can see it's also whipsawed around this. It's kind of almost used it as an equilibrium level for a range. In this case, looking at US dollar CAD, this is not very similar to US dollar yen. This is not something we would preference going into next week in terms of a setup. So again, with US dollar CAD, we would only be interested in going long this market because the market is structured to the upside. But we would only take those positions if there was a full-blown reversal in the dollar index. And for example, let's say US dollar CAD came down, then we had a big rally up like this. We would look for this pullback here, and this would be our setup into this area. So we will be looking for long positions in this market, but only if, as a plan B, as a backup plan, only if we get a reversal in the dollar index. Our preference, as I've said many times, is for dollar bearish positions next week. So the only other way we would use this, apart from putting it to the back and just keeping it as a backup currency, is really that the CAD is also weak. So if you want to venture into other currencies, Canadian weakness next week would also be something we would consider. And last but not least, we have gold. Now the uptrend in gold is still intact, and we do still favor long positions in this market. Last week we started in this area and we just moved sideways. You can see we really didn't go anywhere. So really there has been no change since last week in this market. Any pullback, and we always like the deeper the pullback the better, because obviously we can get better risk to reward setups to the targets. But any pullback in this area is going to give us an opportunity to start to look for bullish setups. And if we get the right kind of bullish setups in this area, if we start to break out to the upside, we're going to be looking at initiating longs up towards the next key of resistance to the upside and the target set from last week, at 1827.12. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everybody who does that on a regular basis, and a big thank you to everybody who has subscribed to the channel so far. We did hit the 20,000 mark, which is great. I want to wish you all a fantastic week next week in your trading, and I want to wish you all a nice weekend. The only thing left for me to say is take care, and don't forget to trade safely.